So my name's Mark Kemper. I'm CEO of the Climate Group, and it's a great pleasure to see so many of you here again this morning. I see people are drifting in, and that's wonderful. I think yesterday was a fantastic first day to the summit where we talked about the what of climate action, and today the focus is very much on the how. What do we need in terms of finance, in terms of innovation, and of course in terms of policy? And we have another tremendous lineup of speakers and panels for you to enjoy today. And no better way to start than to introduce a good friend of the Climate Group, of climate action in general, former president of Mexico and chairman of the Global Commission on the Economy and Climate, Felipe Calderon.
Thank you. Good morning, all of you, ladies and gentlemen. Well, last year, the world came together in a truly historic way to approve the Paris Agreement and the Sustainable Development Goals. However, even though we all know how difficult those agreements were to reach, I dare to say that was the easy part of all of this. The hard part now is to fulfill our promises. Let me tell you that there is an expression in Mexico referring to politicians, and the expression is, prometer no empobrece, dar es lo que aniquila. It's meaning promising doesn't impoverish you, but giving is what kills you. And that's exactly the problem for politicians. So now it's time to make real things happen on the ground. Indeed, we need to focus on getting the job done. As we move from ambition to action, we face three simultaneous challenges. The first is to relaunch economic growth. The second is to deliver on sustainable development goals. And the third one is to meet our promises on climate action as we agreed in the Paris Agreement. But how can we face all those impressive challenges? I think that if we need to choose one place to start, for me, sustainable infrastructure will have the biggest impact. Why? Sustainable infrastructure is at the heart of all three of these challenges. For instance, according to the IMF, by investing 1% of GDP in infrastructure, advanced economies could achieve a 1.5% increase in GDP within 4 years, and this impact will be bigger in developing countries. Sustainable infrastructure can also help us deliver our social goals. Just consider the social benefit from bringing electricity to 1.3 billion people who currently have not access to it. Imagine the boost in productivity and competitiveness, as well as quality of life. Finally, building sustainable infrastructure is paramount for fighting climate change. 60% of current greenhouse gas emissions come from high-carbon infrastructure. In other words, investing in sustainable infrastructure can boost our economies, both in the short run by creating jobs and delivering the efficient, connected system that make our economies work, and in the long run by laying the foundations for innovation and sustained growth. According to the Global Commission on the Economy and Climate, which I have the honor to chair, over the next 15 years, the world is expected to invest close to $90 trillion in new infrastructure and upgrades, more than the entire current world, and the entire current stock. But for our own benefit, we cannot continue building in the same dirty way that we have in the past. Fortunately, building in a low-carbon way won't cost much more than business as usual. Actually, the difference should be at most a marginal 5%, And this added upfront cost can be fully offset by savings, for example, through more compact and efficient cities and lower operational costs, in particular in energy. So in other words, if we are going to invest $90 trillion one way or another in the next 15 years, let's do the right way from now. It's not a question about where we can get the money from. It's a question, how can we apply the money that definitely we will spend in the next years? It's a public policy decision. Less developed and developing countries really have the biggest opportunity here, as we can imagine, because much of their basic infrastructure is just to be built, and they will account for 2/3 of investment over the next 15 years. One example, the population of Lagos, Nigeria, will more than double in that period to reach 25 million inhabitants, becoming one of the largest cities in the world. Advanced economies, on the other hand, will need to replace aging infrastructure with more efficient upgrades. Old infrastructure has a clear economic and environmental cost. For example, in the United States, 6 billion gallons of water are lost each day because of aging leaky pipes. 6 billion gallons a day. So we all know this. We are familiar with that. But although the case for a low-carbon economy is very strong and momentum has been building, still investment continue to be made that lock in a high-carbon and an efficient growth path. Why? For instance, even though solar and wind energy can now compete with fossil fuels in more and more regions, and even though we are more aware of the enormous health costs from fossil fuels related to air pollution, still the equivalent to 1,500 coal plants are in various stages of construction and planning worldwide. 1,500 coal plants. We need to stop it. It is urgent to think, what does it take to stop and prevent those governments from making such damaging decisions? And I believe it's a question to understand the economics and the financial matters behind such kind of decisions. We must address the policy and financing impediments that are keeping the transition from happening. We have to find ways to eliminate financial flows to high-carbon projects completely and substitute them with sustainable alternatives. We know the capital exists for that. We know the capital exists for low-carbon infrastructure. So how can we unlock it? That's exactly the question. In the global commissions, we have identified at least 5 barriers to financing sustainable infrastructure. One is there are some adverse regulations out there, policies that are really a mistake. For instance, of course, subsidies for fossil fuels, the unpredictability and short term of tax policies and tax credit with respect, for instance, to renewable energy, new capital requirements for the banking system that limit long-term investments and consider the same investing in long-term infrastructure than in any other kind of investment. These are all policies that benefit high-carbon incumbents. That's the truth. Second, we don't have enough bankable projects out there. This is because most governments have no institutional capacity, or they don't have long-term plans, and even when they do, they don't communicate them to investors in a right way, or they don't distribute the risk sufficiently. And I need to say, in several cases, the lack of transparency and corruption prevent the international community and investors from taking action. Third obstacle. Investors have yet to see in these projects the returns they need given the risk associated with the investment, especially considering that models don't fully capture the positive comprehensive returns from lower lifetime costs and higher benefits that sustainability implies. The fourth barrier is the lack of viable funding models for sustainable infrastructure, whether because they cannot deliver the returns expected or because they are not eligible for affordable debt financing. The fifth barrier to investment is that it usually comes with high transaction costs. For instance, inefficient bidding and procurement processes generate high costs that reduce the incentives for some investors with limited resources and expertise to put their money in the right projects. On the other hand, fortunately, the Commission has detected at least 4 key actions, 4 key areas to overcome those barriers. What are those? First, once and for all, we need to fix market distortions. We need to fix it by reforming fossil fuel subsidies and putting a price on carbon. Dozens of countries have started this process, and hundreds of companies are already using internal carbon pricing, but we need to make it universal. We need to remove incentives, for instance, for urban sprawling, by reformulating property taxes, for instance, and eliminate fossil fuel subsidies, for instance, for fertilizers, or any kind of fossil fuel subsidies, including for exploring oil and gas, for instance, which implies currently costs up to $600 billion a year in subsidies. Second, we need to invest in more rapid deployment of the existing clean technologies and innovation to bring down future costs. It's incredible, but today, research and development, in terms of GDP, it's half of the amount it was 20 years ago, or in the 80s. In the 80s, the governments were investing double than today in research and development. So we need to increase the budget for R&D. Yes, I know there are already promising initiatives to raise that investment. Through mission innovation, for instance, 20 countries have committed to doubling public investment in clean energy in the next 5 years. Okay, it sounds very good, but we need to be a little bit skeptical about governments. So we need to keep pushing them to deliver it. Or the Breakthrough Energy Coalition from private sector, which is seeking to provide capital for promising high-risk clean energy technologies. Policies that encourage new business model and financing mechanism could allow cities to have decentralized grids and finance urban renewable energy projects. Third, we need to design investment frameworks and institutions that work better to develop a pipeline of sustainable projects. It looks like there are a lot of money looking for projects, but there are very few viable projects in the world. So we need more effective planning, preparations, and governance to make sure that the right finance is available at the right time. To put it simple, we must invest in investment. That is, we have to improve government's ability to attract better investments. It is possible. When I was president of Mexico, we put in place an ambitious infrastructure program, increasing annual investment from 3% of GDP to 5% of GDP in a very difficult time. And we accomplished that by making infrastructure a national priority in the budget, cutting red tape, partnering with the private sector, particularly through creating the infrastructure fund, an investment fund, and that was created by allocating concessions for already existing highways, toll highways, among private investors. So we were able to monetize and reconcession those projects. And finally, fourth, we need to revamp the financial architecture to mobilize private capital. We have to use instruments tailored specifically to the different phases of a project. For instance, a lot of countries have several restrictions in the budget. So in that case, for instance, project finance is exactly the measure we need to boost. But in order to do that, we need, for instance, to get the money coming from international development banks to advise and to provide some kind of advisory for the project. And then we can have public debt and equity that could be used to finance that project until there is enough cash flow to pay back. And therefore, afterwards, the payback is the essence of well-structured project finance. At the same time, any project with cash flow could be useful to monetize and then investing again. For that, development banks, for instance, green investment banks, will be key sources of the much-needed finance for sustainable infrastructure. We can create, for instance, specific task forces, or we could push for some kind of fast-track mechanism that enable these banks to give priority to the best projects out there. So expand the new financial tools like green bonds, green investment banks, and investment funds enhanced by development banks can help attract private finance. More and more companies are taking climate risk into account in investment decisions, and the work of the Financial Stability Board's task force will be critical for strengthening the disclosure of climate-related financial risks. These 4 steps, fixing price distortions, investing in innovation, building a pipeline of sustainable projects, and revamping the financial architecture, provide a roadmap to shift the trillions of dollars we need into the low-carbon economy. Ladies and gentlemen, infrastructure could either be the pillar upon which we base our development and prosperity, or it could lock us into a high-carbon path and therefore become the gravestone that marks the failure of our civilization. We must realize that investing in sustainable infrastructure is not just one potential pathway among many. It is the only growth story of the future. Thank you very much. And now, let me introduce Antonio Simoes, CEO of HSBC Bank. And just let me tell you that he is so good that his bank is doing very well in the Brexit. So, Antonio, please.
Good morning. It's a pleasure. I'm delighted to be here at Guildhall this morning, and thank you for the kind words on the stability of HSBC. As HSBC, we're very proud to be associated with the Business and Climate Summit. So as President Calderon just said, COP21 was an extraordinary achievement, but we now need to move from what was an achievement of diplomacy to actually implementation and the reality of the implementation. So I'll speak this morning mostly from a finance perspective, and I want to give a banker's perspective on this issue. And Mark talked about this earlier when he introduced the morning, that it's about the how. Today, the discussion is about how to mobilize the private finance sector, banking, and the financial sector more generally, at volume and at speed, so that we can help finance the transition to a low-carbon economy. And actually, I'm going to quote the same numbers. The sums are huge. We're talking about 90 trillion that you mentioned just now. And the estimate is that of that, around 85% of those 90 trillion will need to come from the private sector. And so that investment is massive. Think about 85% of it will be something like 76.5 trillion over the next 15 years. So let's call it 5 trillion a year. We need $5 trillion of investment coming from the private sector over the next 15 years. And to achieve these results, we need to move quickly from niche products to mainstream. We need to move from just green bonds for certain projects to all bonds being green. We need to move from niche to mainstream. So in my remarks this morning, I want to acknowledge some of the progress that has been made over the last 6 months, since Paris, since COP21, but also focus on some of the challenges, and actually I'll touch on some of the same points just made. So I was in Paris actually earlier this month. Actually, a few of us were there. We were hosted by Ségolène Royal and by President Hollande, and this was a follow-up session to COP21. And there's an interesting insight. There were around 35 CEOs around the table. So this was a discussion at the Élysée, a very nice setup, sort of like Guildhall, a very nice place. And what was it? The insight for me is that we had 35 CEOs around the table, not discussing whether or not we should have a carbon price, not even discussing what the price of carbon should be. We had 35 CEOs of large international companies discussing the details of the implementation of that. This would be unthinkable even in 6 months ago when Paris happened, or 12 months ago. The fact that they even have the knowledge to be able to talk about the mechanism by which we're going to implement it, for me gave me a lot of hope, and I think that there's not only good alignment as there is good progress. Having said that, there is also a sense of urgency and a real recognition that this is a race against time to deliver what we promised in Paris. Look at the facts. 2015 was the hottest year on record, and 2016 is expected to be even hotter, probably not here in London, but it's going to be even hotter around the world. And the concentration of CO2 is now actually every month at 400 ppm, and really it's well on the way to get to 450, if you remember. That's the indicator of a 2-degree increase. So halting and stopping this increase, at the very least, means delivering on the commitments that we made in Paris. So I believe that we need to continue to have the same level of leadership that we had at COP21 in Paris. We need to have the same strong leadership to move into the implementation phase. The good news is that since Paris, we actually have made progress in removing some of the important barriers to achieving this goal. And let me focus on 3 of them and what still needs to be done. Number 1, policy uncertainty. We need to, COP21 itself gave clear signals to the private and to the public sector that we as companies and investors need to move, and that sustainability is non-negotiable. Major investors are becoming increasingly activist and demanding change in this space. I was discussing this with Saker, and I'm sure we'll hear this from him later on, the CEO of Hermes, that investors are the ones now demanding sustainability. Large energy companies and high carbon businesses in general are responding by allocating capital to greener and more sustainable operations. The second barrier, so the first one is policy certainty. The second barrier is lack of transparency and disclosure. Markets only work when you have quality information on which you can base decisions. And the last few days, the only comment I will make on the last few days, have shown us that when there is uncertainty, markets are nervous and don't like it. So we need the transparency and the certainty of the clarity of standardized information. And I think from that perspective, the FSB's task force and the report that we'll have at the end of this year will be a critical milestone towards that agreed common standard that will help banks like us and others price the cost of climate risk. So if you think about it, investors are already doing this. Actually, in funds, they're already using some of the criteria to rate their funds, and a common standard will help us effectively quantify the costs and the risks of each company. Think about it this way. We know if we have a common standard for carbon footprint of any of the companies here in the UK and across the world, if we have that carbon footprint, and if you have a price, a real price for carbon, immediately you can quantify what is the cost for all the companies. And for a bank like HSBC, and if I look at myself from a CEO perspective, you want to know what that cost is. You want to know what the risk is that companies will need to pay for that carbon footprint. And a lot of our clients, and our job here is to help our clients, and I said this back in Paris 2.5 weeks ago, not just to finance low carbon projects, but to help our clients transition from high carbon to low carbon. And we need to be realistic and remember that high carbon industries generate much in way of tax revenues and of dividends. So we need to help them transition from high carbon to low carbon. And I think that's really important to achieve our climate objectives. Third, the third barrier is around incentives and subsidies, and we already touched on this morning. There's still more to do, particularly in the public sector, to help remove some of the distortions that we have today, not least by phasing out the 4.9 trillion of fossil fuel subsidies that the IMF estimates that are handed out each year. Because in a way we're contradicting ourselves. On one hand we're pricing carbon and we're giving incentives to a transition to low carbon, but at the same time we're still subsidizing fossil fuels. So we have good progress on 3 of the barriers. We have more policy certainty, we have more transparency and disclosure, and we'll have more of that, and we're working on better alignment of incentives. But what can we do practically to scale up the support that the finance sector can give to this transition? Let me give you 3 brief ideas. First, we have to increase the access to private sector funding for emerging markets. Emerging markets are critical to this. The World Bank estimates that around 70% of the investment required in sustainable infrastructure between now and 2030 needs to go to the developing and emerging world. This means that countries like China, where we have a big part of our business, who have an economic weight and markets to draw in, need to pull their weight. But actually, for China, it is easier because they have that financial power. But it also means that countries like the Philippines or Bangladesh or Vietnam or large parts of Africa or large parts of Latin America need to do that, and they face much greater problems. The V20 group, which is the group, as you know, of the most vulnerable countries to climate change, has a combined population of 1.6 billion people. That's a quarter of the world's population. And some of these are the most vulnerable countries and have they have a combination of the greatest need and the most limited capacity to invest. So without the credit quality that international investors need, and in the absence of large financial institutions operating locally in those markets, let's say in parts of Africa or parts of Latin America or parts of Asia, these countries have limited access to the global capital markets to be able to raise investment. And without a mechanism to bring in that private sector, the burden and the risk of investing in these countries will be borne solely by the public sector. So in the last 6 months, we as HSBC have been working closely with the V20 group of vulnerable countries and with multilateral development banks and the reinsurance industry. I think they play a key role here to find a solution. And I don't want to get too technical here this morning, but it's possible to create a funding mechanism that pools the needs and the risk profile of the most vulnerable countries. Think about it, if you put them all together, if you put part of these investments together, you pool the risk, you pool the needs, and then you can create a securitized product for the private sector to invest in. So by investing individually in each one of the projects or the countries, and we mentioned this earlier, there's not enough investable projects. But if you pull them together, there's potentially here a mechanism to securitize it and to bring the private sector in. And I believe that this is the kind of coordination that will help us to get infrastructure financing up to scale. Second, green bonds. I touched on this a bit earlier. We need to bring the global green bond market up to scale. So we as HSBC have issued our own green bonds. We did it for ourselves, and we help many of our clients issue green bonds. The global green bond market has raised around $35 billion so far this year. That's almost as much as we did for all of 2015. So far this year, if you think about it this way, it's doubling, right? So far this year, we've raised almost the same as whole of 2015. And a lot of this growth has been generated in China, the point I was mentioning earlier, which has gone from a standing start last year to around half of the total issuance so far this year. But think about what I said at the beginning. This is still a small fraction of the numbers that I talked about earlier. We sort of get numb to large numbers when you talk about 35 billion. Actually, even if we do more or less the same for the second half of the year, let's say it's 60 or 70 billion. I talked about 5 trillion earlier on. We're talking about 2 zeros difference. We're talking about 5 trillion a year that are needed, and we're talking about a green bond market that at best will be around 60 or 70 billion at the moment. So the scale, that's why I'm talking about moving from niche to mainstream. And for that we need standardization, we need better incentives for issuers to issue green bonds rather than conventional bonds. So when I have discussions with our clients, the reality is that at the moment green finance is more expensive than conventional finance, because this undermines the economic rationale. The logic should be that at least they should be priced the same way, and additionally there's more costs of compliance on the company side when they issue a green bond, because they need to make sure that the funds are directed to those projects. So while the market will continue to grow steadily without any incentives, I think the 35 will continue to grow and be a bigger number. In order for it to get from niche to mainstream, we need policy support. I believe that this also needs to happen in a coherent and cohesive way globally. If we have a fragmented global market governed by all sorts of different sets of principles and policies, this will restrict investment and it will reduce transparency. It will not encourage it. So I believe that avoiding this fragmentation is essential to keep the momentum from the investor side, but also from the issuer side. And the final point I want to touch very briefly touches on some of the points made earlier. Urbanization. Finally, we need to unlock the private sector finance to the world's major urban areas. We know the statistics. At the moment, 75% of CO2 emissions at the moment come from cities. And we know that mass urbanization means that at the moment, half of us, as the world population, lives in cities. By 2050, that will be 2/3 of the world population living in large cities. So for cities, we need to take a more integrated approach to planning, and that needs to incorporate sustainability as well as growth. And I believe that there's no single financing solution for such a diverse set of needs for cities, but we need to find ways to connect cities with capital. And a lot of cities get funded, obviously, at the national level, but many cities can actually issue green bonds themselves. The idea of connecting capital with cities, and that capital needs to be invested in low carbon infrastructure, and this will mean that they can lead their transition as urban centers from a high carbon to a low carbon world. So let me finish in an optimistic note. I'm a glass half full type of guy, and 6 months on from Paris, we are much closer to being able to implement the terms of COP21 than we were back in December. The barriers to investment are lower today, the call to action is louder, and there is clear willingness on the part of businesses and investors to change and adapt their business models. These are all extremely positive. We now need to ensure that we manage the transition and we move rapidly from this idea of this being a niche area to being mainstream. And the fact that investors want to invest in sustainable projects, the fact that they want to reduce the carbon footprint of their portfolios, that they want to support the public sector to upgrade its infrastructure and to fund new technology, all of those are positive. But this can only be achieved by strong leadership. The same leadership that we displayed through diplomacy to get to COP21, we need the same leadership and partnership with all the actors in the financial system. We as HSBC stand ready to play our role. And if this happens, I have no doubt that together we can unlock those trillions that we talked about earlier, and we can help finance the transition to a low carbon economy. Thank you.
Thank you very much, Antonio. You'll be able to just hear more discussion about some of those important themes in the plenary that comes a little bit later this morning. However, now it's my great pleasure to introduce the Secretary of State for Energy and Climate Change, fresh off the campaign trail, to talk about her core subject, which is climate change. Amber Rudd.
Thank you very much. The decision to leave the European Union is of historic significance. I argued fervently against the decision, some of you may have noticed, but a clear majority disagreed with me and those who campaigned with me. So what do you do after you've lost such a battle? Well, you dust yourself off, you take a breath, and then start to fight for what is best for the country. To be clear, Britain will leave the EU. The decision of the British people was clear. The key challenge now, as the Prime Minister and the Chancellor have stressed, is to work towards a settlement that is in the best interests of Britain. As a government, we are fully committed to delivering the best outcome for the British people, and that includes delivering the secure, affordable, clean energy our families and businesses need. That commitment has not changed, because while the decision to leave the EU is undoubtedly significant, the challenges that we face as a country remain the same. How do we protect the strong economy that we have built up over the past 6 years? How do we ensure that we build the infrastructure we need to underpin our strong economy? How do we ensure people have good jobs that pay them well? The challenges to our environment remain the same. How do we make sure people can have respite from the daily grind in safe, clean, green spaces near their home? How do we ensure we protect our most precious species? And how do we ensure our green and pleasant land is protected, both to respect the efforts of generations past and as a responsibility to generations to come? These concerns have been at the heart of conservatism for centuries, and they are central to what we are as a party. But in particular, I want to underline our commitment to the issue over which I have primary responsibility, namely climate change. We made a clear commitment to acting on climate change in our manifesto last year. That will continue. Climate change has not been downgraded as a threat. It remains one of the most serious long-term risks to our economic and national security. I was lucky enough to lead the world-class team of British diplomats at last year's Paris climate talks, and our efforts were central to delivering that historic deal. And the UK will not step back from that international leadership. We must not turn our back on Europe or the world. Our relationships with the United States, China, India, Japan, and other European countries will stand us in strong stead as we deliver on the promises made in Paris. So while I think the UK's role in dealing with a warming planet may have been made harder by the decision made last Thursday, our commitment to dealing with it has not gone away. At the heart of that commitment is the Climate Change Act. Its success has inspired countries across the world, and its structure of 5 yearly cycles inspired a core part of the Paris deal. I know many of you are keenly awaiting the outcome of our deliberation on the 5th carbon budget. You can expect the government's decision tomorrow. It's an important building block of our economy's future, and you would expect us to take our time to ensure we got the decision right. And however we choose to leave the European Union, let me be clear, we remain committed to dealing with climate change. The Act itself was not imposed on us by the European Union. It was delivered with cross-party support by the UK Parliament. Leading Leave campaigners have made it clear that they remain committed to it. The Climate Change Act in 2008 underpins the remarkable investment we have seen in the low-carbon economy since 2010. Investment in renewables has increased by 42% since 2010. In 2014, 30% of all Europe's renewable energy investment took place here in the UK. Annual support for renewables is expected to double during this Parliament to more than £10 billion. Last year, I set out a clear vision for the future of our energy system. We said that security of supply would be our first priority. Since then, we've consulted on changes to the capacity market, which has further secured our position. And we're likely to see significant investment following the auction later this year. Beyond that, we will continue to invest in clean energy. We've agreed to support up to 4 gigawatts of offshore wind and other technologies for deployment in the 2020s, providing that the costs continue to come down. At the same time, we made tough decisions on support for renewable energy, reflecting our core belief that technologies should be able to stand on their own 2 feet. We remain committed to new nuclear power in the UK to provide clean, secure energy. Government has prepared the ground for a fleet of new nuclear stations. 3 consortia have proposals to develop 18 gigawatts of new power stations at 6 new sites across the UK. These will support more than 30,000 jobs across the nuclear supply chain over the coming years. We have announced record investment in new heat networks to enable new and innovative ways of heating our homes and businesses. And we made a commitment to closing unabated coal-fired power stations, a commitment that was praised by leaders across the world. All these commitments remain in place. They will help us rebuild our energy infrastructure. And I am certain that future investment in this sector will continue to flow to Britain's strong economy. As the Chancellor made clear earlier this week, thanks to the reforms of this government, the United Kingdom approaches the challenges of leaving the European Union from a position of strength. Growth has been robust, the employment rate is at a record high, and the budget deficit has been brought down from 11% of national income and was forecast to be below 3% this year. Britain remains one of the best places in the world to live and do business. The rule of law, low taxes, a talented, creative, determined workforce, and a strong finance centre. We have to build on the strengths of our economy, not turn away from them. We have to enhance our scientific leadership, including our cooperation with other countries. These factors, a clear energy policy framework, and a strong investment-friendly economy combine to make the UK an ideal place to attract investment. Whatever settlement we decide on in the coming months, these fundamentals will remain the same. As you would expect, neither has my opinion changed that the best approach to dealing with environmental damage is in a conservative approach. Fair markets so people can have confidence their investments will be protected. Balancing the need for investment with the need to make sure bills for families and businesses are still kept as low as possible. Trusting people to make responsible decisions, even though you may not agree with everyone. At the heart of the approach I set out last autumn is our commitment to innovation in energy, and I'm delighted this topic is top of the agenda today. We do not yet have all the answers to addressing climate change. We must nurture new technologies and industries that will make our future energy system both cheap and clean. In energy, we are leading the way. Last autumn, as part of the Paris talks, Britain committed to Mission Innovation, a global partnership to encourage greater support for innovation. It was complemented by the Breakthrough Energy Coalition, 29 wealthy investors pledging to invest in energy research and development. I met Bill Gates earlier this year to discuss this, and we agreed that the need for a transformation of our energy system has never been greater. We also agreed that the transformation would only happen if we can find technologies which are reliable, clean, and cheap. We are doing our part. That is why, as a government, we've committed more than £500 million over this spending review to supporting new energy technologies. This means supporting entrepreneurs as they look to develop the innovations of the future in storage, in energy efficiency, and in renewables. As part of that programme, we'll build on the UK's expertise in nuclear innovation. At least half of our innovation spending will go towards nuclear research and development. This will support our centres of excellence in Cumbria, Manchester, Sheffield, and Preston. Our nuclear programme will include a competition to develop a small modular nuclear reactor, potentially one of the most exciting innovations in the energy sector. Let's be honest, as the Chancellor said, we now face a period of uncertainty. The decision on Thursday raises a host of questions for the energy sector. Of course it does. There have been significant advantages to us trading energy, both within Europe and being an entry point into Europe from the rest of the world. Europe has led the world on acting to address climate change. The economic imperative that drove those relationships has not changed, and openness to trade remains central to who we are as a country. As the Prime Minister said, we will work towards the best deal possible for Britain. Securing our energy supply, keeping bills low, and building a low-carbon infrastructure, these are our priorities, and they remain the same. Our commitment also remains the same. As I said, I think the decision of last week makes it a harder road, but I will fight with the same passionate determination to secure the best outcome for my country and for our environment. As investors and businesses, you can be confident we remain committed to building a secure, affordable, low-carbon infrastructure fit for the 21st century. Thank you very much.
Thank you very much, Secretary of State. You mentioned, referred many times to the need for investment. We've got a room full of the private sector, and I'd be just curious if you could elaborate a bit more on how you see the government and the private sector collaborating more effectively to unlock the investment that we're going to need for energy security, low-carbon future.
Thank you very much. Well, we heard from our last speaker about the need for transparency and certainty. So as a government, we hold those two imperatives very closely. We understand the need for that, and we'll do our best to deliver on them. But one of the things that really struck me from the Paris Climate Change Agreement and the negotiations that we all participated in to get there was how closely business and government worked together in arriving at a final conclusion there. It's not as though these decisions and these policies are done to business or to investors. I think they're very much done in partnership. And I think that having business and investors partnering with government, helping to formulate policy, helping to decide where the emphasis should be, is really the best way to proceed to get the best outcome, which, as we know, and we heard from earlier speakers like Philip Calderon, the scale of the investment is so substantial. We need to make sure that that relationship delivers the right outcome.
Great.
Thank you very much. Well, I'm very happy to take any questions. Yes, there's a gentleman here in the front row. Third row.
Could everybody say their name and who they are, and a microphone will is arriving now.
Hi, it's Simon Evans from Carbon Brief.
Yes, Simon, I follow you avidly on Twitter.
I wonder if you have any thoughts on how much more expensive investment in UK energy infrastructure will be made by the uncertainty that's been created.
Well, I mean, that's a rather depressing question and quite a difficult one to answer, because obviously it will depend on the success of the government going forward, delivering on the policy certainty that businesses want and the economic certainty that investors want. All I can refer to in answer to that really is the Chancellor's statement early in the week that we will work as a government to give as much certainty as possible, to reassure markets, to make it the case again and again that Britain is open for business and we are a good, safe place to invest in. So I will make sure that in the energy sector, I liaise with infrastructure investors, I reassure businesses, I continue to make the case for why Britain is a great place to invest in it. What the actual consequences will be, we don't know, but I hope that we'll be able to mitigate them by our certainty and our confidence and our enthusiasm going forward. Thank you. Yes, Emily Gosden. Yeah.
Thank you. Secretary of State, during the referendum campaign, you warned about the risk of Britain potentially being excluded from the single energy market. And already we've heard several companies seeking reassurance that the UK will remain part of that market. Do you think we can realistically expect to remain in that and other single markets while also securing the curbs on immigration and freedom of movement that the Leave campaign has promised? And if so, who do you think would be best placed to lead the country in negotiations to secure such a deal?
Well, I can exclusively reveal today that I'm ruling myself out of that particular competition, Emily. But You ask a series of questions there that we don't have the answers to yet. I mean, this momentous decision was made last Friday. As I say, I've been very clear about my views, but the fact is I now want to make sure that we deliver the best in terms of our clean, secure, affordable energy targets, and having a close relationship with the European Union, with other countries that help us address issues of security through interconnectors is going to be critical going forward. I hope to be part of those negotiations to make sure that we get the best for the country and best for consumers, but how that will actually work, I can't say yet because we haven't entered into those negotiations yet. But I hope we'll be able to maintain a very close relationship in terms of delivering on energy. Yes. There's a gentleman up here. Sorry, I'm making the microphone person run around.
For fitness. Thanks very much. Alex Morales, Bloomberg News. I was wondering if you could tell us if you've had any discussions with EDF since the Brexit decision, and whether you think the investment in Hinkley will be affected by it.
Thank you. I have spoken to EDF. I've spoken to the chief executive, and they are absolutely committed to going ahead with the final investment decision. And they wanted reassurance from us, just as I sought reassurance from them, that there was no change at all in the process and in the decision to proceed. And we hope to have the final investment decision very soon. I note that Minister Macron has also made a similar announcement over the past day or so, so I don't believe it'll be impacted at all. New nuclear is going to be an incredibly important part of delivering on our low-carbon future in the UK. And as I said in my earlier remarks, I also think there's going to be a great future for the UK in developing small modular reactors. So we remain committed to that nuclear programme and are still full tilt on Hinkley Point. Thank you. And there's a gentleman in the middle at the back there. Thank you.
Thank you. Merlin Hyman from Regen. You mentioned the extraordinary level of investment in renewables in the last few years, and of course a lot of that's been underpinned by the European Renewable Energy Directive and the commitment to 15% of our energy from renewable sources. I wonder if you're able to comment on the government's commitment to those targets and within that directive going forward.
Thank you. Well, we have a lot of targets to make in terms of our renewable and our renewable energy and our carbon emission reductions. And you're right, we have seen some remarkable investment in the UK. I believe we can carry on getting that. The UK has been at the lead in many of renewable technologies, like offshore wind, where we have more than the rest of the world put together, and of course solar, where 99% of solar has been put up in the UK, has been put up since 2010. So renewable energy is going to continue to have a very strong future here, and I'm going to make sure that businesses and consumers are continually reassured of that. Yes, the lady sitting next to you.
Thank you. Polita Clark, Financial Times.
Lisa.
Ms. Rudd, Boris Johnson wrote in a column a couple of years ago that he wasn't sure about global warming because it was a particularly snowy winter. I wonder if you think that voters should be concerned about potentially having a Prime Minister who isn't sure if climate change exists.
Polita, when I consider who to back as leader of the Conservative Party and future Prime Minister, knowing where they stand on this issue, which is so important to me, and I think is so important to the whole country and to everyone here, will be absolutely central to who I support, and I will be very, very clear about that and very vocal in holding anybody to account on that and getting the sort of commitment that will reassure us all. There's a gentleman here, and then I'm going to leave you, sadly.
Thank you, Liam Stoker from Solar Power Portal. You mentioned the need for a creative task force to deliver the climate change goals that we need. I'm just wondering how you thought that might be affected both by the uncertainty over employment that's sparked by the Thursday's vote and the cuts to renewable subsidies since, well, last year.
Well, I would put those in slightly different sectors because the cuts to the renewable subsidies were part of an ambition we have to make sure that we deliver on our targets while keeping the bills down. I know that has been difficult for the solar industry, but I hope that we will be able to continue to support the solar industry, but with not quite so much money, and I'm hopeful that the solar industry, as far as I can see, is making nevertheless good progress, not as fast, but good progress, but I'm going to continue to watch it to make sure that we do. I mean, the vote last Thursday was of a completely different magnitude, and I'm going to also work very closely with colleagues across government to reassure people about the commitments we have here in our area, but also in other areas of infrastructure, which are part of an ambitious government delivering on the economic ambitions that we have. We need to reassure people, we need to be clear that Britain is open for business and that it's a good place to invest. Just before I leave, just a final comment, if I may, is that I felt that with the EU referendum last week, that those of us campaigning on one side were very clear about the economic risks. But ultimately, the decision was to leave, and it was quite, to a large extent, an emotional one. And I think that it was an interesting lesson, perhaps for all of us here who care about addressing dangerous climate change and secure energy. It is incredibly important to have the right financial structures, the Green Investment Bank, to consider how many millions, trillions need to be invested. But it is also incredibly important to make the emotional argument. And there is an emotional argument to be made here. It is about protecting our planet, protecting our environment, and making it clear, above all, that we want to bequeath a planet in the future, a country in the future, that we, as the generation now, have looked after. Thank you very much.